All right, I'm gonna do the dot-com bubble this time, and we can do the dot-com and the financial crisis, and then go look at our current bubble on the NASDAQ. Should be pretty cool. And the NASDAQ is bouncing really high right now, and you'll see in a minute that it's not crazy, and it looks pretty normal. And here's what's happening. This is Brian Lewis with MMT Investing, and things just changed. So man, this thing is aggressive. Goodness. So I set up the general increasing bull market tangent lines on this, and you can see the NASDAQ bubble going up here. And then we get the blow off top there, and the back test here, and then that's how we do it. So each one of these ascending trend lines, that's a bull market support line, where you get most of the action on top of the line. And you can see in the bubble, it's not something that slices through. This is a wave that originates here, and then you get a higher degree wave. And then when you get up there and finally backtest and terminate this line, that's it. That's the end of that wave, and that is an end-to-end tangent on this waveform, and it's gone. And then you get down to the next one. And this is how the bubbles work. And so here, when we're backtesting this guy, like that's the end of that wave, and that wave started here. So you get a wave, and then you get, most of the action is on top of the bull market waves for the most part. These are bull market support kind of tangent lines on a bull market wave, and this is where the angle increases, and then you get the bull market on top of that angle, and then this is where that wave terminates, and then you get out of there. And then once these things terminate, they're gone. They're gone forever. And that's what we're looking for on the backside of the bubble. And then also I would like to point out, after some bull market activity like this, and then you get a rip that just looks absolutely freaking insane, like we got off the top of the everything bubble here. Like, you can't ignore this thing. Like, you just blew off the top of a bubble, and you're breaking these trend lines, and then you go terminate them. And that's what we're looking for now. But I wanted to point out a bunch of things on the NASDAQ. This is a pretty clean bubble reversal, and we get right back down to the floor here. And then we do something interesting, which sort of looks like Japan, where we kind of terminated the floor, and then we just kind of trend out into a bear market. But that bear market is immediately where we start the financial crisis bubble. And then we get this kind of floor here off the bottom of the financial crisis out here. And this is our current NASDAQ bubble. And I'll get over to that in a minute. There's one thing that stuck out to me when I was setting up the NASDAQ, is they have a lot of these W bottoms on the NASDAQ. And there's a lot of, when you get a bull market line, there's a lot of these W kind of bottoms underneath that bull market line. And that's something we saw on the S&P, like on the 10-year or 12-year bull market up the S&P to our bubble now. But I thought it was very interesting, just kind of the shape of it, and then how flat this financial crisis bubble is compared to the NASDAQ on this one. And so I guess this area, well, if we look at the time, I mean, just this little down part here is already, let's see, I didn't time this thing out. 28th of March. Okay, so this is shorter. This is a shorter timeline than our bubble, and it looks like a 5 wave here. 1, 2, 3, 4, 5 wave here that terminates the tangent, and it seems to usually be a 5 wave that terminates it. And this doesn't look like much at all. I mean, it's way out. I don't know. There's probably a 5 wave in here. but I can't see it on the daily candles. But we do break it and then just go back up and terminate it. But most likely what we got was a dead cat above it, an immediate back test, and then you go into a 5 wave. And that's the general break. You get an A, B, C wave down, and then you get a back test, and then you get your 5 wave. And that's what we see in the Great Depression, in the Nikkei bubble, in the dot-com, in the financial crisis. We'll go see what the financial crisis looks like in this one. But this long bull market backtest that I get here is over the course of 4 months, something like that. And this little thing is a week. So, I mean, right now we're in, what are we in, like a month and a half of our bull market. So, I mean, potentially this thing could run out like this a long way. We saw in the Nikkei, yeah, it's completely different on each one. Like the length of how long you stay underneath these bull lines and then terminate. Like for the Nikkei, it went underneath the first little bull trap line and it just stayed under there forever before it finally broke it. And the second one was faster with bigger bumps. So like the exact shape of them really depends on, I guess, which kind of cycles you're in during that part of the wave. But this is a really interesting one, and it's pretty normal kind of kind of backtest pattern on the big part here. And this is the bull market line that supports the entire bubble. And you notice that this bull market line gets broken near the top of the bubble, and then you get down the backside. And that's what we see in all of them, in the Nikkei, the Great Depression, dot-com. If you go look at the housing bubble, we need some kind of like, I wonder if there's like a mortgage-backed security index or something that I can do the housing bubble, because it would look properly bubbled. It's kind of rounded on the S&P and it's really flat if you go on the NASDAQ. And I don't think that's a great analysis of the housing bubble. But you can still see, even though it's kind of flat, you still get the same thing. You still get this bull market line with most of the action on top. And then you get the ascending trend lines. And then you get under them and you do a 5-wave back test, get under them and do this, whatever this thing is. This doesn't look like a 5-wave. This is just some weird nonsense, and then terminate it. And then the NASDAQ W. NASDAQ loves these W shapes on reversals. And you get W's underneath the bull lines a lot. W, W, W. There's a bunch of W's here. These are the euro dollar W's on the way up. We see these on the we see those W's on the .com or on the S&P also. W's underneath. So that's a really common, and this W underneath the bull trap or underneath the bull line, these are called bear traps usually. And it's usually this kind of W shape underneath the bull line, and then it shoots back out. And then, oh yeah, and then we get over here to Volmageddon. So let's see, where are we? Fab. Yeah, like this is Volmageddon on the NASDAQ. It's like a non-event on the NASDAQ. And then this second crash in 2018 is a major thing. But this is the same point where we reverse on the S&P. And I think most of these points are the same thing. This is the end of the financial crisis. So I had the bull market line on the financial crisis coming out of this consolidation area here. I don't know if that works on this one or not. I don't think so. I think it fits better where it was, because you need the bull market activity on top. So when I was first drawing these wave tangent lines, I was trying to get like right on the consolidation kind of reversal point. And I think that it ends up being better if you just get the line on the trend as best as you can and just like kill it when it hits the other line. Just kind of go down backwards and just kill it when it hits the other one. And then you get more of a clean look of how that bull market line looks. and it gives you a really good estimate of where this thing is going to terminate. But I mean, as you see, like it can it can hit it once and terminate it. It can hit it like 30 times and terminate it. It can take 3 days. It can take 10 months. They're all completely different. But you just kind of hang out around this line until you terminate it, and then you just go for a rip. And I wish I could go back and look at these credit cycles. I don't have data back here for the credit cycles back to the .com. I just start getting those kind of cyclical data stuff. Like from Hedgeye is really good. But you can go look at kind of credit reports and credit, like what credit scores are necessary. And this is, it's the Eurodollar international banking system. So you can't really dig into these like private international banks and see what their, credit allocations and stuff are. But you can look at the repo market and the repo rates, and that starts telling you a big picture of when the repo market gets crazy and they don't want to lend, like that's a huge marker that stuff's going on. And we got that back in December here before this crash, and it was in September last year, I think. Yeah, around here. This is kind of the repo market crazy area that we were getting the crazy stuff on the repo. And then we get another just parabolic blast out of there and this thing. And so, yeah, if you draw off of the bottom, I'm calling this the Volmageddon bottom. But Volmageddon is really this peak back here when there's a bunch of volatility on this first drop. But 2018, I call this whole 2018 thing from the peak over here to the bottom, the Volmageddon, like top and bottom. But you can see the bull market line on this. Like everyone's like, oh, the NASDAQ is back up. It's only down, whatever, 10% from its highs. And the bull market line for this angle up indicates that, it's right around there. I mean, we should be getting pretty close to it here. I don't know exactly where to drop it because, I mean, this is a pretty short trend line, and we have a reversal here that could be here, maybe, or something. It's usually good to try to get the activity on top of the bull market line when you're drawing these market trend lines. And it's really easy to draw the line in retrospect after you see it reverse because you can start at the end and draw backwards. But it's a little bit trickier predicting forward because tiny little movements are a big number around this point. Like when you zoom in here on the hourlies and you're looking, I mean, it's a huge swing of where you think you might get to that line. And then it's not like as soon as you touch the line, it's game over. I mean, you can go hang out on this line for a freaking year or something before it terminates. But once you've got this blow off, like this right here basically killed that line. Like once you do that, well, I shouldn't say that because, yeah, I should say that. I was gonna say you get like these V bottom reversals, but these V bottoms always land on top of another line and start a new line. That's not the same thing. Like this kind of drop when you break a line and you get back up to it, like that's a termination thing on the backside of the bubble. That's when you're terminating the end of the tangent. So I mean that's the outlook from the bubble model. And the Nasdaq's not surprising. This number is not surprising. The thing that's surprising to me is this. This is the surprising thing. Like that is a deep gash. That is crazy deep. Like if you go look at the Nikkei or something, I mean, like the Nikkei when it broke this first tangent, like it went to like here and went like like this, and it kind of went for a while before it finally reversed, and it kind of came down to this one. But I mean, it came to like here. It was nowhere near this other line on the Nikkei, and this is just something else, man. This is the highest volatility ever, like in the history of the world, man. The Great Depression didn't have a gash like this off the top. Nikkei definitely didn't get a gash like that. Um, but if we go back, let's yeah, see, like this is more kind of like what the Nikkei looked like. Just kind of got underneath and just kind of played around until it terminated it, and then kind of yeah. That's this look is a lot like the Nikkei bubble kind of looked like that. And let's go back to the NASDAQ and see if we can find anything else interesting. Because this whole analysis is mostly just checking out this .com bubble on the NASDAQ index because this was the NASDAQ bubble. So we get the real drama shapes on this NASDAQ index. And it looks pretty close to what we're doing now, I guess, on the S&P. On this one, we got so much more volatility. Well, I mean, this is crazy. Well, look at this drop, and this peak. Like this probably actually is kind of through here. I could try to zoom in on this thing. I don't think it's gonna let me go back here on the hourlies, and it would take me like 20 minutes of scrolling to try to get back here. But I think we're actually in here, and we just got these huge volatile swings on either side of that line before we killed it. And that is kind of like what we got actually on the S&P, because there was a lot more volatility in the first little bull trap, and we're getting a pretty smooth. I mean, so on the S&P, we got this crazy deep gash underneath. Well, actually, I mean, really, the next line that supports the whole S&P is pretty far down there. We didn't get anywhere near that line, but we got deeper than this for sure. And then we just kind of blah blah blah. We're just kind of hanging out on the line now. So yeah, yeah. So the S&P is looking weird. It's hard to track when it's going to break or if we're going to get another like kind of shot down and sort of a double thing. And this is a common thing that you see a lot is you get a big down movement before terminating it often. And we did get sort of a big down movement and get back up now, but it's not like this kind of single point reversal. I mean, we got more of like a down movement off of like I don't know how to compare this one exactly to ours. They're not always the same shape, and they're definitely not the same length. I mean, they can go short or long or whatever. But it does seem to be that the main bull line that supports the bubble gets a whole lot of action before it terminates. And and then when you get down to the kind of the floor of the bubble, they can do different things. Like this looks more like kind of the Nikkei where it just kind of trailed off underneath the floor. And then sometimes when you get down to the floor, like I guess like on the Great Depression, we got down here and kind of went under, and then the Great Depression just took off like on a whole new higher tangent line, like way up. And so that's the kind of look that we're trying to figure out is where are we? How do we know when we're going to terminate this thing? And I don't know the cycles, but in our current bubble, there is credit contraction cycle data that was saying, 3-ish months kind of for a down cycle. And usually you're going to get, yeah, man, I'm just trying to think about the cycle data in this one because we only have like a month and a half of kind of down cycle activity to work with for using that data to predict the bubble. Like if we don't terminate that thing and get down in the next month and a half, then we switch into an expansion kind of. It looks like 3/4 of expansion, like 9 months of inflationary expansion, and then who knows after that. So yeah, I'm not exactly sure. Please hit the like button to help me out with the YouTube algorithm. And let me think if I can. This is not investment advice, but let me think if I can think of anything else kind of useful here. I mean, that's the main that's the main idea. And I guess there's one point to make for the Nikkei, I guess, relative to our bubble. Like this is quite a long way down here. And oh, wait, that's like the floor. No, that's not important. Let's see. So this is our line off the financial crisis bottom. Okay. Yeah, so this line off the financial crisis bottom may or may not be our real bubble line, because we have a long supporting line all the way back to 1982 that supports the dot-com. It supports Black Monday came back to it, and then the dot-com and financial crisis came back to it, and that's kind of like this line. It's way down here. But this is really cool to see. Yeah, this is interesting. This is a different shape of a bubble graph than we're getting on the S&P actually. Like we actually have an extra line. Like we already on the S&P, this Volmageddon line was just the dead cat bounce like to here. On the S&P, we just terminated the Volmageddon line here, and then we're back. Yeah, this is different trend lines than the S&P. And I wonder, I don't know, I have to think about that a little bit. Because, yeah, it's the financial crisis trend line that we're underneath on the S&P right now. Like we're back testing underneath this line on the S&P right now. And the NASDAQ is up here still on the Volmageddon line. That's weird. And I wonder if that has something to do with oil or something like that. Because oil's the huge thing that crashed, and that definitely affects the S&P, and I guess it doesn't affect the NASDAQ in the same way. Hmm. Well, hmm. That would be really weird to see a completely different bubble kind of unwinding shape on the NASDAQ than the S&P, but probably the same timeline, but like different tangent lines on the same timeline. This could be a really cool thing to watch. I wonder if we're going to terminate this on the NASDAQ and get underneath here in the short term on the NASDAQ, and then maybe the NASDAQ and the S&P will take a. I don't know what to expect. We have these are way better trend lines to work with actually on the NASDAQ for predicting a kind of a next move, because this is a clean line that's nearby. that we could easily just kind of break and backtest here. That would be completely normal on the NASDAQ bubble. But on the S&P, underneath the spot where we are now, it's just kind of like a who knows where we're going area. It's just this huge area, and I don't really have any way to kind of predict where we're going. But if the NASDAQ does this and there's a clean line and it's the same time frame, maybe this NASDAQ will be a really, really good way to try to predict timing on things better than the S&P. Okay, so that's a lot. I don't know how this is a really long one. I didn't mean to go that long, but this is really good because we get a really clean look at these earlier bubbles here, and you can still even though this is a super deflated financial crisis, you can still see all the same moves. You see the bull market lines, you see the tangent trend lines, you terminate and reverse off the next one. And that's just pretty much what you do. I mean, you terminate the one and you get down to the next one, terminate it, get down to the next one. And then at some point, you get to one and you say no to it. And then usually you'll take off on a higher tangent. And sometimes you just stick on the same one. Like on Black Monday, it crashed like this and just stayed on the same one on the floor. Or like Japan, it went under the floor and did a weird bear market for a long time. On Black Monday, it stayed on the floor. Great Depression and financial crisis, it went up like that. So the reversal angle is really hard to predict, but this unwinding behavior is a little bit easier to predict because you're just kind of trending on these bull market tangents until you get off of them. So that is the look, and this this look right here makes me expect a sooner turnaround than kind of the behavior on the S&P is getting weird and hard to track. Like the MACD is going way to the green side and it's getting higher highs as the MACD comes down, and it just looks weird and it looks hard to predict. But this angle here, I mean, how long could you possibly stick on this trend line before reversing off of that thing? I mean, that thing looks like it's going to reverse pretty soon. So, all right, that'll do. That'll do. Please hit the like button. Not investment advice. And happy NASDAQ crazy bounce thing.